Hello, this is Chris Davison, and I want to give you a quick update on Wallabot, and in particular Wallabot Millionaire. Now, for those of you who've been following the progress of Wallabot Millionaire since May of last year, you'll know we've been forward testing it on a demo account where we started with £5,000 and have been trading it live for the last over a year now. Where it peaked at about 300% gain and is now currently sitting at not as impressive but still quite impressive 230%. And I've been asked to comment on the differences between Wallabot and Wallabot Millionaire by a number of people, and the answer is very simple. There is no difference other than the percentage which is risked on each trade, and let me show you that using some backtesting results. Now, if we look at this is the euro-dollar 15-minute chart between 2009 and the end of 2010, so 2 years data over which we designed and backtested the original Wallabot. And based on, if you were to risk a reasonable 2% of your account on each trade, or reasonable for this EA, you would get something that looked a bit like this. So starting with $10,000 and finishing with just over $40,000. Now remember, this is backtesting. This was the data on which the EA was designed, so you would expect it to be profitable. And if we look at the results we got here, roughly speaking, 55% of the trades were winners, and the average trade was about 1.5 times the average. The average winner was 1.5 times that of the average loser. Now, to change that data into that of Millionaire Wallabot, all we do is we change this to risking 10%, and I'll set that running. And you can see, what you'll see here is the trade sizes are down here. So that particular trade was 3.5 lots. Obviously, risking 10% of your account on each trade, you're going to get some much larger lot sizes. The clear risk of running any EA risking 10% per trade is it doesn't take very many losers in a row to wipe your account out. So this is really only an experiment to see what would happen if we did it. I'm just going to pause this recording until we get to the end of this backtesting. So here we go, the 2 years is finished and we've ended up with around about $1 million. There you can see it, the actual figure. Again, the percentage of trades that were profitable is the same, as you would expect that, and the average winner is actually slightly better than the average loser by more than double in this example. However, what I think you should look at is what happens if we now start looking at data beyond when it was tested. So we're going to go from January 2001 until the present date in terms of this recording, which is beginning of June 2012. And I want to show you the results of this uncharted data. Remember, Wallabot was never tested on this data. And I want to show you the effects of that drawdown, so you'll understand why, whilst the results we get are very encouraging, and we've seen that in the data here, if we look at the drawdown that we would have suffered, it's an interesting thing to think about as to whether your risk profile is prepared to do that. So let me start this off. And the graph will start plotting here, and again you can see over here this is the size of the account. We started with $10,000, and this is the low point that we're going to get to on this journey. So if you look at this, the low point of this was about there, where the equity dropped to 3.8. So about 60%, just over 60% of your account had been lost during this period of poor performance, the drawdown period. And for many people, they would have stopped trading at that point. And I certainly have done that in the past, where I've stopped trading because the system appeared to be losing, when in fact, had I carried on, you would have got the upside of that period of poor performance. Quite often you get then a period of very good performance. But again, you can see we're suffering big in 2 or 3 trades. We're going from there's a $75,000 balance there, down to whatever you are down here, 40,000. And this drawdown is absolutely what you would expect to see when you're trading very, very large percentages of your account, which is why it's only really an experiment or something you do with a very, very small percentage of your live account which you can afford to risk, i.e. you take some money, put it in a micro account or a demo account, or a separate live account, and trade it separately to your main trading account. So I'm just going to let this finish. So here we go. The last trade was taken on wherever this is, the end of May, and from our $10,000 starting point, we ended up at just over $91,000. And if we look at the percentages of winners, it was about 46% this time. But again, the average profitable trade is about 1.5 times that of the average losing trade. So we're seeing a very, very similar profile to that we saw in backtesting, which is always good. But again, you're going to get these big periods of drawdown, which is why, whilst Millionaire Wallabot looks absolutely fantastic in terms of growing an account, it is high risk. So you either accept that high risk and use a small portion of your account, a small portion of your money in a separate account to trade it, or you're looking at running on a demo account to see what happens. Or what most people will do is to say, actually, I'm not entirely comfortable with 10%, I'm going to run it at 2%. And if we look at what happened again in the unknown candles ahead, this is a result trading at a more modest 2%. And as you can see, the first thing to notice is that the drawdown, rather than being 60% of your account disappearing, this was just over 10%, maybe 12% during the really bad drawdown period. And again, I should pause the recording while it finishes the test. So here we go, we finished that test, and first thing you notice is that not only was the low point a lot higher than in the previous example when we were risking 10%, but the drawdown periods, although they still exist, they're a lot less exaggerated. And if we look at the report, again, the 46% winners, and the average profit was about 1.5 times of the average loser, and we ended up with in just over a year and a half doubling our money. Now that doesn't mean clearly going forward that this will happen again, but it is encouraging to know that a system, when it was run in data that it had never seen before, behaved in line with what it had seen in testing. So I hope that's answered the question about Wallabot Millionaire. It is a high risk experiment using the standard Wallabot Live system, and we shall carry on running the experiment. But please understand that risking 10% of your account on any one trade is a very, very high risk scenario if you get a series of losing trades. Thank you for listening.